Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Wednesday, November 8th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Before I jump into the charts, I just want to mention that on Tuesday, we put out a stock pick on Nike. So you may want to check that out as well. We've done a lot of stock picks, obviously, twice a week over the last few weeks that are still very relevant in the market right now. Nike was put out on Tuesday. Check it out. You get a 5-day free trial. On with the charts. I'll just jump to the chase on the weekly chart and just remind you that a little over a month ago, we settled below this 10-month channel bottom that is well above the market at 256.20, indicating 181.80 as a completed objective. I mentioned 3 to 5 weeks at the time. I also mentioned could take 1 to 2 months depending. And right now, I still think 181.90 in reach. I'm going to jump to the daily chart, holding below this descending 1/3 speed line that has been containing highs since late last week, 223.34, able to contain weekly buying pressures, and yes, below which that 181.90 channel bottom on the weekly chart in reach. I'm going to say over the next 2 to 3 weeks. That is consistent with present volatility. It could take a little longer, could take 3 to 5 weeks. And so let's work down today. That is 204.80. I don't expect to see this level today. I do have a soft intraday pivot point. I did have one, yesterday at 218.40. And that just got too sloppy. Both sides of the market, it did not act properly. Well, properly is not the right word. It didn't act as expected. How's that? 214.03 is a downside 3/8 Fibonacci over the last week and a half. It can contain intraday selling. And yes, if we break, especially if we were to open Wednesday morning below 214.03, we could certainly test 204.80 intraday, where a daily low can be placed. And if we close below 204.80, which I don't expect today, 191.92, then likely within 3 to 5 days or less, onward down to, once again, that long-term support at 181.90 on the weekly chart. Daily chart is 184.12. This is a better representation, I think, of the 3 to 5 week time frame. Below 223.34, this market can fail. Back to 204.80 over the next 3 to 5 days, back to 191.92 over the next couple of weeks, and over the next 3 to 5 weeks or sooner, 184.12. That is 181.90 on the weekly chart, where we could bottom out well into the first quarter and turn higher again. That is the downside. Path of least resistance remains negative below 223.34. But I will mention, if you were a Wicked Stocks subscriber, for instance, you would know that the Triple Q Tuesday put out a meaningful buy signal that I'm expecting to play out through the rest of the year. And that said, intermarket relationships. This doesn't mean that that Tesla is going to follow through if the Triple Q rallies, 5 or 10% over the next couple of months. Will Tesla, rally all the way into the low 260s because of that? No, it might. But let's just get back to Tesla. And that is to say that if we push or open today above 223.34, 234.26 is potentially in reach. That is a 3/8 upside Fibonacci. I just want you to know that I've got 234.58 here, which is this low from late September. So I've rounded up just a bit. Now this high here, this gap that occurred a few weeks ago, that is 230.61. So I will say that pushing or opening today above 223.34 should yield 230.61 intraday. And if we close today above 223.34, not only expecting 234.26 by Friday's close, but once again that 256.20 former long-term channel bottom over the next 3 to 5 weeks. 256.20, as you can see on this chart, is the beginning of a narrowing zone of meaningful resistance that ends at 272.69. I think we've got a better daily chart version of that. 256.20 represented here by a horizontal line. So if we close today above 223.34, that does pivot the market into the bullish column through the rest of November and well into December. This move is probably in the order of 3 to 5 weeks into what is now the low 270s, will soon be over the next couple of weeks the mid 260s, 256.20 rising, 270.96 dropping, able to absorb buying on a monthly, possibly quarterly basis. It would be a significant buy signal into later next year, or at least through Q1, if by the end of, say, December or sooner, we were to close above 270.96. But we're a long way from that. First things first, we need to close above 223.34. Until then, this market can top out, can grow tired, it can grow overbought as we move into later November, can fall back to 204.80 over the next 3 to 5 days or sooner, 191.92 over the next couple of weeks. And once again, I'll just take you back to this chart, the 181.890, longer term channel bottom in reach over the next 3 to 5 weeks or sooner, holding below 223.34. Holding below 223.34, if you were to reach for 180 or 185 out of the money puts that don't expire for at least several months, that would be the options play. Inversely, if we close above 223.34, I would liquidate any short positions, regardless of whether you're 3 to 5 days or 3 to 5 weeks out, because you could then perhaps reach for 265 out of the money calls that don't expire for at least several months. This would be about a 3 to 5 week play to the upside. So big pivot point here, 223.34. And I don't think there's really anything that needs to be said beyond that. I'm going to leave it at that for Wednesday's Tesla. You have a great day. Please click like, share, subscribe, and check out wickedstocks.com.